Down week for the markets. All three of the major indices on track for a losing week. With that in mind, what's your word of the day?
My word of the day is countdown, because that is what we're in, aren't we? We're counting down to this election. And the reason the election is just so important this time is we don't have anyone that it's really is a clear winner here. And that creates the volatility, and volatility is really what's driving this market at the moment. And those concerns are being reflected in stock prices.
So I want to ask you, do you think if you can, I don't know if you have a percentage in mind, but what percentage is the election? Because keep in mind, we have rising bond yields and we also have the earnings season underway. And while earnings are meeting expectations, they're not really wowing people like we've seen in previous quarters.
So I was really surprised about September being an up month, because we had an assassination attempt. We had a change in the ticket at the top. And despite that, we had a market being up. And I think that was really kind of the surprise Fed cut. Here, we're actually seeing the market react to an election the way it has traditionally, which is the market sells off going into an election. So in this sense, in every other election we've had in October where earnings are supposed to matter, but generally speaking, the market declines going into an election. And we're seeing the market play out now as we expected it actually to start playing out in September.
Okay. With some of this volatility in mind, a lot of people go to the bond market. So earlier today, we were talking about corporate bonds. Throughout the week, we've been talking about treasuries. Are you seeing opportunities in the bond market right now?
I think one of the areas that we're looking at in the bond market is that we think that this cutting cycle is going to be shorter than the market is expecting and shallower than the market is expecting. And that's really what's driving our strategy here in the bond market. One of the things that we do, however, is we kind of extend the market beyond just the near term into the long term. We do think that we need to start thinking about these fiscal deficits and what that means for both the economy and what that means for the Treasury market.
Well, what does that mean? I'm looking at the yield right now on the 10-year, basically 4.2. Would you suggest that people lock that in?
I actually think that yields are going to go up, because
Really?
the fact is that we really do have a situation where our fiscal deficits are starting to become a problem. And if you take a look at that, there's two sides to every coin, and it's always good to have the good and the bad. Obviously, that's going to compress our fiscal ability to spend from a fiscal basis, as we do need to tighten the reins there, and the interest expense goes up from a government's perspective. So the ability of them to make transfers, particularly to the lower class. But the higher interest rate at the government level is actually income to a number of Americans, but those Americans tend to be our more wealthy. So I do think that the economy and the country is going to have to adjust to this, and we are probably looking at an environment where we have higher taxes in order to make some of these adjustments.
Back to your election point, JP Morgan note out earlier this week that we touched on yesterday, actually forecasting that rates on the 10-year could go up as much as 40 basis points depending on the outcome of the election. I want to get to some of your picks right now. You gave us picks that you're seeing opportunities in multifamily real estate, data centers. I'm not saying that these are your picks. We're going to show a few stocks that kind of cover both of those areas. Also industrial warehousing. So there's Blackstone. They kind of do all those things. Then Equinix, it's a company that's kind of a data center company. And then Prologis, they do the industrial warehousing for things like e-commerce. Obviously, Prologis shares down year to date. Any of these stocks that you like, or these areas, how would you play these different trends that you're seeing possibilities and opportunities in?
So if we take a look at the office market, actually office has gone from about 30% of the real estate market down to close to 16. So it's almost a halving, as you've seen a significant decline in office valuations. And as you said, with rising interest rates, we also started to see declines in other parts of the market. What we're starting to see in the commercial market is signs of stabilization. We've had an environment where properties have not been moving, so you've had really low transaction volume, and we're starting to see transactions happening, and that to me is a very positive sign. I think within commercial real estate, given what's happened in the office market, a lot of people are saying, I prefer to just miss the first part of the bounce and wait. And we think when you have that type of mentality in any market, you actually need to be a little early, because once the market starts to move, there's a lot of capital that's going to flow. So we actually think that there's potentially an opportunity for investors in the office market.